Hi, I'm Joe Bergeron, President of the Association of Vermont Credit Unions. October is co-op month, and the third Thursday of October in particular is Credit Union Day. And you know, cooperatives in the state of Vermont are a growing and thriving contributor to the economy in the state, and more people are becoming members of cooperatives every day. And we thought that it would be a good thing to bring together representatives of the different kinds of co-op sectors that are represented in our Green Mountain state to have a discussion about the different types of cooperatives that we have in the state, the issues facing them, and maybe provide some modest education for those that are a little less familiar with cooperatives or some sectors of cooperatives. You know, there's a lot of people in the state that belong to cooperatives of one sort or another. But there's a big percentage of those individuals who aren't familiar with the many other types of cooperatives that are right nearby to them where they live or work or go to school or whatever. And they may not even know some of the basics about their own cooperative. So that's kind of what we're here today to do for all of you. And joining me today in our broadcast here are 5 individuals from 5 different sectors of the co-op community in the state of Vermont. I'm going to reference my notes here because I don't want to mistake anybody's name, title, or location. But starting to your left, at the end of the table is Julia Curry, is a co-op coordinator with the Champlain Housing Trust. Next to me is Matt Kropp, who is Associate Director at the Vermont Employee Ownership Center. And on the other side of me is Kari Bradley, General Manager of Hunger Mountain Co-op. And then next to him, Christine Hallquist, who is Chief Executive Officer of the Vermont Electric Cooperative. And then at the other end of the table is Kelly Littlefield, Promotions and Events Manager at the Cabot Cooperative Creamery. Thank you to all of you for joining us today to share about some insights about your co-ops and the co-op community and economy in general. And so we're going to get started. We're going to spend a little time talking about each different sector and then maybe ask each other a few questions after that. So Julia, if it's all right with you, housing co-ops, why don't we start there and just give us some highlights?
All right, thanks. I appreciate being able to be here and talk with you all. So, as Joe said, I work for Champlain Housing Trust, which is one of the 5 housing trusts around the state. We serve northwestern Vermont, and my program is housing cooperatives. So, before I get into the details of how our co-ops operate, I think it might help to just talk a bit about housing co-ops in general, because there are a lot of different flavors around the country and around the world. So, a housing co-op, any housing co-op, is just a multifamily property. And they can, Champlain Housing Trust exists to create affordable housing and help people get affordable housing. So affordability is our mission. Housing co-ops overall aren't necessarily affordable housing. In fact, some people may be familiar with co-ops in New York City, for instance, where they're exceptionally unaffordable. You might have housing co-ops there that cost millions of dollars to move into. So I'm not talking about those when I talk about our work. Our housing cooperatives developed because, as I said, Champlain Housing Trust exist to help people get and find affordable housing. And the co-op model offered kind of a way to broaden the range of options that we provide. So we provide rental housing, we provide a way to buy affordable home ownership, and having a housing cooperative kind of combines some features of renting and some features of owning, and also brings some unique strengths. Our housing cooperatives, it costs less than it does on the open market to move in there. Financially, living in our co-ops is really like renting. So people are not buying property. But the essence of a cooperative is that people are sharing ownership of the cooperative business, right? So when people move into one of our co-ops, they buy a share in the co-op, and that identity as a member owner is what gives them the right to lease their apartment. Something that is unique to our cooperatives, or not true of every housing co-op, is that our members are required to participate in helping to run the co-op in some way. And this really creates a very strong sense of community because people get to know each other in a meaningful way. They're not just, waving hi across the parking lot. They really interact. So our co-ops create a strong sense of community, and I think a sense of security that people feel that is really valuable to a lot of people, living in the city where life could feel somewhat anonymous in another context. So that's just a wonderful benefit in addition to the affordability that the co-ops offer. So if you compare housing co-ops to condominiums, say, that's another multifamily housing option, but in a condominium, people have to qualify for a mortgage to buy their apartment. They have the option to participate on the condo board and have some influence over decisions that get made about the whole property, but they don't necessarily have to do that, and there's no inherent structure that will get people, interacting with their neighbors there. So in the housing cooperatives, our members are they don't have to take that financial risk and make that financial commitment to qualify for a mortgage, In the co-ops, some people eventually would like to own a place, and to some extent then living in the co-op is kind of training wheels. They can learn about managing a property. Some people never want to own a place, maybe they have in the past, so it's a great alternative for them. Compared to renting, I think that in this country, renters often feel pretty powerless. If you have a good landlord, it's a great setup, right? Because they have to do all the work. If you have a not so good landlord, that can be very frustrating and cause a lot of insecurity. So in the co-ops, the members have the opportunity to influence decisions, to learn about why decisions are being made, to suggest alternatives, bring proposals. So they really have an opportunity to be much more educated and involved in the decisions, that affect their lives. So what we see in the co-ops is people typically live there for a long time, and they're really investing in, kind of the community. It really feels like home to them in the same way that I think in this country we associate with buying your own home. We find that in our co-ops people get that without having to buy the property. And that's a great benefit for the whole community as well as for them, obviously. So that's probably a good place for me to stop right now. But I did also want to mention that in Vermont, we're really fortunate to also have mobile home cooperatives, and that's not something that I work with, but I collaborate with the Mobile Home Co-op program, which is based at CVOEO. So if people want to learn more about that, CVOEO is a good contact for them. And one other thing I'll mention is that we're also, both the CHT co-ops and the mobile home co-ops have benefited from state laws that really protect our ability to, create our housing and maintain our housing. And I guess I just want to shout out to all the lawmakers who were involved in passing those laws and protecting those laws. They've helped stabilize housing for a lot of people in Vermont.
Thanks very much for those insights, Julia. That was real informative. Next, if it's all right with you, Kari, I thought we'd go to you. Well, you're right here, right next to me. There's quite a few food co-ops in the state of Vermont, from small to large, and I'm sure a lot of people have membership in one or more food co-ops. So you have all the knowledge about food co-ops in Vermont, so share it with us.
I have a portion of it, but thank you for the opportunity. It's great to be able to participate in this. I'm here to represent the food co-ops, which many Vermonters are familiar with. We actually have 17 food co-ops in the state currently, and they do range from large urban supermarket down to small country store, and even the co-op in Barrie, which doesn't have a storefront yet, but is working to organize and open a storefront for that community. Our co-ops span the history of food co-ops in this country. The first wave of food co-ops actually occurred back in the Depression era, where the issue that the problem that co-ops were trying to solve at that time was simply access to food. There wasn't enough food and the right kinds of food available in certain communities, and that motivated members to come together and form a cooperative. So the examples that we have of that currently are Adamant Co-op, which is just down the road from where I live, the oldest co-op in the country, food co-op in the country, and as well as Putney Co-op in the southern part of the state. the second wave of co-op, which is most of our Vermont food co-ops, occurred in the 60s and 70s. And here the issue was access to natural food. So this was the sort of the birth of organic and bulk foods and unprocessed foods. And there were many communities that came together and formed a food co-op in that era. We're now actually in the midst of a third wave of food co-ops, which is really exciting. And that really started really around the time of the Great Recession. There was a lot more interest in cooperation and collaboration, at least in the food sector. The recent examples of that would be the Morrisville Food Co-op, the Granite City Food Co-op in Barre. And here the emphasis tends to be on access to local foods and also again, access to food, period, in locating in communities where there is not a grocery store available, or where people are really interested in having local ownership and getting away from a non-local ownership option. So it is a really exciting time in the food co-op world. A little bit of statistics about our food co-ops. We have over 42,000 owners, so a significant portion of the state. We employ over 800 people, and back in 2008, Doug Hoffer actually did a study, and he concluded that taken together, the food co-ops are a top 25 employer in the state of Vermont. We have over 133 million in revenue, and that ranges from a store that's over 40 million to a store that's less than 100,000 a year. So there's quite a range there. And one of the big emphases for our co-ops is employment. We see ourselves as a preferred employer in the grocery world, and that is shown in the turnover rates, about half the rate of conventional supermarkets, and in comparison of wages and benefits. We're in the retail sector. It's a notoriously tough business to be in with thin margins, but we feel that, and this is coming from the values of the ownership, that doing right by our employees is really the right way to go. So a couple ways that the food co-ops set themselves apart. One is in terms of our values. And at my co-op at Hunger Mountain, like many of the food co-ops, we measure success across a triple bottom line. So we're looking at not just financial impacts, but also environmental and social. And by that I mean we're measuring things like our electrical usage. How can we have less of an impact on the planet? How can we inspire others to go solar, or things like that. In terms of social, we put a big emphasis on donations and giving back to the community, being a good employer. What is it? Principle 7 in providing education in the community. So how we measure success is a big part of it, but then also being inclusive, some of the things that Julie was talking about. When we're making decisions, we really want to make sure that we have an informed ownership base, and that people have a voice and an opportunity to participate in those decisions. For example, this year, my co-op is having a year-long discussion about member discounts. We've had a structure where some members are receiving a discount based on whether they work at the co-op, or are a senior, or a low-income member. And so we're taking a fresh look at that and asking, is that the right way to arrange it? We really need the members to weigh in and let us know, do they think that is right, or should we make some adjustments? So that kind of inclusive decision-making is sort of a hallmark of our version of cooperation. It takes some time, but we feel like it leads to better decisions and sort of more loyal customers and owners in the long run. So again, thank you very much for having me here, and it's good to participate.
That's all great information. You know, like you said, anything to do with retail, you know, is can be challenging at times, but it sounds like there's a lot of success story there in Vermont food co-ops. That's great.
Thank you.
Kelly, Cabot.
Yes.
Certainly is a name everybody knows on food shelves all over the country and beyond and whatnot. But I'm not sure everybody knows about the farmer owners of Cabot, and you know how the whole thing is structured and everything. So what can you tell us?
Well, hopefully I can answer that for you and everybody. Thanks again for having us here as well as everybody else has said. Here to say our farmers thank you, which kind of gets back to what you were saying and what an agricultural co-op with agricultural sector means. So that means that we are owned by the farmers. They're the members, they're the owners, they're the ones that make up the board of directors, and they determine the path which the company is going to take. So from what I was able to find from the co-op census that was taken back in 2016, I know VSCCU participated, Cabot participated. There are about 13 agricultural co-ops in the state of Vermont, and they range in size from Deep Root Organic Co-op, which is in Johnson and has 27 members, to Cabot, which is 1,100 farm families strong, but that's really split up between the New England states and upstate New York. So that it was with just over 200 families from Vermont that are members, and we employ 633 Vermonters, all over. I think it's over 130 cities, towns within the state of Vermont. So a pretty big player. Happy to be here. A lot of people know of our stores. We have footprint stores, so we're in Waterbury, we're in Queechee, in the town of Cabot, where you can go on the tour and see how the cheese is made. Great thing about the agricultural co-op is that it gives farmers a consistent market for their products. So for our farmers, it gives them a consistent market for their milk, which a lot of farmers right now dairy farmers are dealing with the fact that there is an abundance of milk, an overabundance, too much milk, and there's some security in being a member of the co-op, so they have somewhere to send that milk and a market for it. It also helps them with shared learning amongst their other businesses. So a lot of the farmers, around the country and the world have to diversify. And in Vermont and New England and New York, a lot of our members have by having a bed and breakfast, or they'll have a maple business, they have a farm stand. Being a member of the co-op helps them to be able to share their learnings amongst each other, both from the board back down to the members. So it just gives them, another outlet to help with that planning. Another great thing that we see popping up in the agricultural sector that I think is great is farmers market co-op. So it kind of gives them a more sustained schedule across the year. Obviously, being in Vermont, summer is big for farmer markets, but wouldn't you love to see it more of a year-round thing? So the co-op model has established that for Bellows Falls, Brandon, and Richmond, as well as Dorset, all have a co-op farmers market, so they're more year-round and more sustained. So I just thought that was a great way to show how co-op has kind of given that a year-round sustainability. And just, again, happy to be here and thank everybody for giving us a chance to tell the farmer's story.
Well, thank you, Kelly. I know, like I said, Cabot's obviously a very well-known name by most consumers out there, but what they may not know is that Cabot is a huge supporter organizationally of all these different types of cooperatives that we're talking about today through the state of Vermont and far beyond. So, we all really appreciate that support that Cabot lends to all of us. Matt, employee ownership. I'm going to guess that what you do in the Employee Ownership Center in Vermont and the organizations that you deal with are probably a lot of organizations that Vermonters may be familiar with, but have no idea that they're employee-owned and have cooperative roots and whatnot.
Yes, so the Vermont Employee Ownership Center has been around since 2001, and our focus is on, as our name suggests, supporting businesses moving to employee ownership. And there's a couple of models that we work with. One model is called the Employee Stock Ownership Plan, and so there's a lot of larger companies that are employee owned through that. So things like Gardner Supply Company or King Arthur Flour or PC Construction. On the co-op side of things, we work with worker cooperatives, and a worker cooperative is basically, it can operate in many different sectors. There's worker co-ops in agriculture, there's worker co-ops in manufacturing, there's worker co-ops in the service sector. But the thing that ties them together is that they're owned on a one-member, one-vote basis by their employees. And so there's currently 16 worker co-ops in Vermont, and some examples that are, of relatively sort of present around would be like PT360, which does physical therapy. There's also Catamount Solar, which is a solar installation company that's been growing. In Montpelier, there's the New School of Montpelier, which provides special education services to a number of towns in the surrounding region. So there's a great diversity in sort of what these worker co-ops do. But the core at the base is the idea that every member owns a share, and that profits are divided up amongst the workers, prorated either by the hours worked or W-2 income. So they still pay normal wages like any company, and you're sort of an employee on the one hand, but then you also get a dividend at the end of the year and can accumulate sort of retained earnings in your name and an internal capital account. So we really see it as a way to both kind of build more broad-based wealth in the economy at the sort of point of employment, and then also really we've been seeing the growth that we see is really around conversion. So there's some worker co-op startups, but as everyone who's in business knows, starting a business is really hard. But right now we're kind of in the midst of what some people refer to as the silver tsunami, which is the all of the baby boomers who are looking at retiring and own small, medium-sized businesses as creating something of at times in certain places a buyer's market, or in terms of business succession. And so really what we put a lot of effort and energy into is thinking about how do we get the word out to these business owners who are looking for someone to buy their business, that there could be the buyer right in front of you, your employees. It's a process. It doesn't work for every company. You really the things that recommended are having a participatory work culture already, being good at sharing numbers, having employees who tend to stick around for more than a few months. So not super high turnover industries, but for companies for whom it works, it can be a really powerful tool that increases productivity because everyone's kind of paddling in the same direction because they have a direct stake in the outcome. So we usually see at least a few companies come to us seriously interested and looking to explore it a year. And about in the past few years, we've been seeing between 1 and 3 companies making the jump. So it's a sector that's steadily growing, and there's more national kind of interest in this as an ownership succession path and model as the sort of boomers continue heading down the demographic bulge heads down the python. So so I think things are getting more dialed in, and there's more interest as time is going on, and so for folks who are interested in learning more, we do seminars around the state. And then do an annual conference every June that brings together worker co-op people and ESOP people and those who are interested.
It's really interesting, Matt, and a great way to advance and grow cooperatives in a whole lot of new arenas that go far beyond some of the ones that we've talked about here already today. Christine, not everybody is fortunate enough to have their home or business powered by an electric cooperative like yours. So I bet there's a whole lot of people out there that want to hear about what that's like, and about Vermont Electric Cooperative and other co-op utility providers around.
Thank you. Be happy to talk about that. Vermont Electric Cooperative, we serve 32,000 members in Vermont, northern Vermont, over 75 towns, with low-carbon electricity. We provide services to 75 towns in Vermont. We have 107 employees. We bring in about $80 million in revenue, but we turn about $25 million of that around within the state as a cooperative, I must say, first of all, I'm very proud to work in a cooperative. The cooperative system is pretty much a miracle in the work of good government, and I'll talk about that in a minute. But I also will say that, as a recovering electrical engineer, I believe that the electric grid is one of humankind's most impressive accomplishments. And if you look at the electric grid, in somewhere around the 30s, about 25% of America had electricity. And it was clear that the economic model wasn't going to work for the other 75% of the landmass in the country. So Franklin Delano Roosevelt, through executive order in 1936, formed the cooperative system. And that's why I say, in times when people lose faith in government, this is one of those miracles that happened. And the way the cooperative system built out was, at the time, it was mostly started with the farmers, but the idea is they built the wires with their own money, but turned that capital over to the cooperative, and that became working capital to build additional wires. And that built out to today, where we have 75% of landmass covered, and people have electricity. And the economic model today is no better than it was in the 30s. If you look at rural America, revenue per mile is about $15,000 versus over $100,000 on the investor-owned side. So you can see we're working with a lot less money and doing a lot more. And what's also exciting is because of the cooperative model, we are able to innovate quicker than the larger utilities. And I would say that's because we work through the cooperative principles. If you look at cooperation amongst cooperatives, some cooperative in Minnesota will try something, and then it'll work, and then we'll all pick up on it, and we're all watching what each other are doing. And then the other important component is concern for community. We look at part of our role as to be the economic development arm of the rural communities as well. So we work closely with the rural communities in economic development. And I will say there are two co-ops in Vermont. We have 32,000 members. In central Vermont, it's Washington Electric Co-op, who serves about 10,000 members. And we work very close together in Vermont. I'm also the president of the Northeast Association of Electric Co-ops. And there are 9 co-ops in New England. So New England was a fairly dense area to start with. It didn't have a lot of cooperatives, but there are over 900 cooperatives nationwide. So again, it's an excellent model for how we've been able to serve an area that probably wouldn't have electricity today. And now the focus of the national cooperatives is to focus on bringing broadband out to these rural areas. So that's our next challenge, which is very similar to the electric challenge.
Thank you very much, Christine. Those are impressive figures, and an area that I'm not all that familiar with. But it's my turn to talk about credit unions, and I'm reminded from both your discussion, Christine, about electric cooperatives, and Kari's about food co-ops. You both referenced kind of I don't know if it was a birth, but a surge of your particular co-op sectors that was brought about during or as a result of the Great Depression, and that was the case for credit unions too. So all three of those sectors, I think, were advanced to some degree through need by people in rural areas that needed financial services and better sources of food and electrical services. For credit unions, a little bit about credit unions in Vermont, and I'll reference my cheat notes there so I don't forget anything. We have 20 credit unions in Vermont today. They range in size from somewhere around $1 million in assets, which is small by credit union standards. That's a part-time operation with one part-time employee, to something in excess of $1.2 billion or so in assets, with numerous locations and hundreds of employees. About 58% of the residents of Vermont belong to a credit union someplace. And so that's a pretty high penetration by national standards when we look at states around the country, and what percent of consumers do their business at a cooperative credit union. Credit unions are chartered under either state or federal law, as are most financial institutions. But all the deposits in every credit union in Vermont, whether it's state or federally chartered, are all federally insured. And it works the same way and to the same levels as most people are familiar with at other types of financial institutions. And so money is safe and sound in a credit union. They're not insured differently than for-profit financial institutions. Services by credit unions, like with all financial institutions, they vary by credit union, but most provide all of the same kinds of consumer services that you experience at most other kinds of financial institutions. Deposit accounts, checking, consumer loans, mortgages, investments, so on, credit cards, debit cards, so on and so forth. And in some cases, various levels of small business lending. There are a few consumer-facing aspects of credit unions that are a little unique to credit unions compared to other types of financial institutions. One is a the cooperative nature of credit unions, as all the organizations that we're talking about today. So the members vote for the board of directors and participate in the board and so on and so forth. Some credit unions, the members vote on the changes to the bylaws of that credit union. Some credit unions participate in a nationwide shared branching network, which is unique to credit unions, and that came out of necessity. Credit unions, compared to their banking counterparts as typically smaller financial institutions in aggregate anyway, don't have all of as much brick and mortar as for-profit financial institutions nationwide. Today, that may or may not be an issue depending on how a particular financial institution delivers services to its members or consumers. But studies prove again and again that even though people may not go to a brick and mortar credit union or bank branch frequently, some do, but not everybody does, but they still want to know that there's proximity to them, and they want to know that they have a backup to go to and whatnot. So in order to economize and provide more benefit to their members, a lot of credit unions nationwide have banded together in a shared branching network, and so they are connected, much like ATM networks are connected, so that a member of credit union A can go into the branch of credit union B, whether it's down the street or on the other side of the country, and transact a business as if it were in its own credit union. So that's unique to credit unions. Other types of financial institutions don't have that I'm aware of. The field of membership of credit unions, most of the cooperatives, not all that we're talking about today, service some particular group of people. And I think in credit unions it's somewhat more defined than it is in a lot of other types of cooperatives. Credit unions typically have groups of people that they serve that are based on some geographical definition, whether it's an entire state or some counties or towns or so many miles within a radius of whatever, or whether it's occupational, everybody that is related to the school system in such and such a school district kind of thing or whatnot, or everybody that works for some particular employer or combination of employers and so on and so forth. So all credit unions have some kind of definition of who can belong to their credit union. Granted, it's become a lot broader today than it was at the time of the Great Depression, but the reason for that isn't because of a loosening of laws or whatnot. It's because at the time of the Great Depression and for many decades thereafter, it was challenging to start a new business, as one of you referenced earlier, as it is today. And so the easiest way to get a credit union off the ground and flying was to form it amongst a very captive audience, everybody who worked in the same building at the same company and would go do their business at the credit union during their lunch hour kind of thing and whatnot. Since then, we're all a lot more mobile in our world today, and so therefore credit union fields of membership have become broader and more accessible by more people. Something else that's unique to credit unions, but in the financial services world, but I think it's common among all the cooperatives that we've been talking about today, is the motivations that drive the decision-making process in the boardroom of a credit union. As I said, the board of a credit union is made up of members of that credit union elected by their fellow members. And when they sit in that boardroom and they're making decisions about what services to offer, what those services are going to cost to consumers and so on and so forth, they are doing that with a thought in the back of their minds of generating a return to the owners of the institution. And that's no different than it is in some merchant down the street that owns a shoe store or a food co-op or anybody else. The difference is, however, from a for-profit institution, that in the credit union, all the owners that are deriving that return or benefit are everybody that's a member of that credit union, whereas in the for-profit bank or other kind of business on the street, it's some other group of people, a subset perhaps, that is much smaller, and so their job is to assess whatever fees and rates that they can in order to generate the rate of return for those other people that are not necessarily being served by the institution. So it's just natural that around the credit union board table that all the decisions that come from that group are going to be to the benefit of the people who are all the members of that credit union. And that accounts for why the rates and fees in credit unions for different kinds of services, whether it's the interest you get on a deposit, the rate you pay for your loan, or the fees you pay for overdraft protection or a credit card fee or what have you, are typically more favorable to consumers in a cooperative, not-for-profit credit union than they are in a different kind of financial institution. And so as an example of that, we do surveys of financial institution rates and fees pretty much monthly, not just in Vermont but around the country. And so we're able to do some calculations on the financial benefits that credit unions provide to people who do business with them by comparing those rates and fees at a credit union on average across all credit unions to the same numbers at other kinds of financial institutions. And so in Vermont, for example, consumers over the course of a year, this is just Vermont credit unions and just people doing business with Vermont credit unions, they save about $27 million per year by doing business with a credit union versus a for-profit financial institution. And that $27 million is comprised of about $16 million in preferred rates on loans when you borrow from your credit union, about $4 million better in savings rates, and about $7 million are saved by Vermont consumers on lower fees, basically, that they pay for, say, checking accounts or credit card fees and so on and so forth. You combine that with the 1,100 jobs that Vermont credit unions provide, and another, say, 1,200 or so jobs that are supported because of the business that credit unions do with different kinds of companies in the community for whatever services they have to support their business, like other businesses do when they outsource services and whatnot. And so all combined, the investment that Vermont credit unions are able to make in the Vermont economy is somewhere in the area of $500 million a year. And so we're pretty proud of that, and that's from 20 credit unions. So not a lot of credit unions, but a big return to the state of Vermont by way of an investment in the economy and benefit to lots of consumers, 58% of them in Vermont. So with that, we've shared with you information about our different co-op sectors and a little story about them. And I thought that it'd be good if we all just kind of maybe had some brief conversation about anything you want to talk about and ask each other anything that might be of interest to you. And if you don't mind, I'll start it out. I mentioned about the Great Depression, and that reminded me of the Great Recession of 2008, 2009, that whole mortgage meltdown period and whatnot that we all read about so depressingly in the media and heard about every day as you're watching stock markets go down and down and down. But right after that and ever since then, in credit union land anyway, it seems like credit unions kind of like blossomed since that time. And everybody regarded credit unions as, I kept hearing before that, during all of my years working in credit unions, credit unions are, great, but they're a secret. Not a lot of people know about them, and so on and so forth. But then since that Great Recession, credit unions are in the media a lot more. There's reporters seeking out information about credit unions, writing about them without really it being sought by us and whatnot. And consumers, when they're looking to switch financial institutions because they're moving, because they had a bad experience, or what have you, seeking out credit unions a lot more than it seems like they did before. So it's been a popular time for credit unions. And I'm wondering if the same has been true for your sectors. Anybody want to share?
Yeah, food co-ops actually surprisingly did very well in the years immediately following the Great Recession, in part because I think people were trading down from eating out at restaurants, but also in terms of the spirit of cooperation. People were interested, I think, in an alternative system to what we perceived got us into the mess of the Great Recession. And so I mentioned the third wave of co-ops really got started around this time, and an interest in alternative ownership. And I'll just mention that this has actually been studied, but society does tend to go through waves, cycles of more or less cooperation. It was described by a sociologist, I'm forgetting his name now, but he called it the me and we cycle. So there was a we cycle that sort of peaked around sometime in the 60s. It reverted more towards individualism in the 70s and 80s, and we're clearly back in a period where people are interested in cooperating and collaborating.
Wow.
Yeah, I'll add to that one of the things about the electric cooperatives is the members really like their cooperatives. So if you look every year, the American Customer Satisfaction Index comes out, and it's a J.D. Power survey that says, compares all these different industries together, like UPS. The airlines are typically on the bottom, but it's like different levels of satisfaction, and the electric cooperatives always come out on top. And there's tremendous change going on and I would say very positive changes going on in the electricity world today when it comes to solar, renewable sources, and now storage. And of course, we're proud of the fact that we're rolling out storage as we speak, and we lead the nation along with the other Vermont utilities in terms of renewables. But the point I like to make to the employees is, we considered ourselves for 75 plus years as a poles and wires company, but now what we realize is we are a cooperative, and that cooperative meaning that no matter what changes happen in the future, we have a basic level of trust that in our members, and our members always call us about their different solar dealers in the state. What do you think of this one? And we try to be non-biased, but it's nice that they call us, and of course we provide those services too. So if we provide a service, what we've discovered is if we provide a service at the same price, and I'm talking particularly about solar, as any of the others, people will buy the cooperative solar. So we feel very well positioned, and I like to talk about the fact that I believe somewhere in the near future it's going to be cheaper to disconnect from the electric grid than stay connected. And we'll be relevant then as well, because it is all about the relationship. So we'll be an electric insurance company or something like that.
So can I ask you a quick follow-up question? In this, I'm afraid this is going to show my ignorance about electric cooperatives, but when you were just talking about solar, for example, when you promote solar to consumers, are you limited to doing that, whether it's a business decision or for whatever reason? Would that activity for Vermont Electric Cooperative be limited to your geographical footprint that you have now, or could you do that elsewhere?
It's currently limited to our geographic footprint. And it's interesting, we do what we call community solar. So we give all the benefits of rooftop solar, but at a much lower price, because we'll build a large solar field in it and take advantage of economies of scale and give you the same benefits that you might get from another third party. And you don't have to put it on your roof or worry about maintenance or all those other things. So that's kind of that whole cooperative model. Has us continuing to look and follow up to what you were talking about, the whole piece of we. Certainly, I think the we in focus at some of the big issues we have that we're facing. There's a recognition that we're all in it together.
One point too I'd love to bring up is, talking about society, talking about individuals and many of the issues that are out there, right? And how, as an individual, do you have control over what's going on in the world? Well, one way you have is the way that you spend your dollars. So you can spend your dollars to support companies, co-ops, where essentially the model makes it so that you are cooperating amongst each other, that you are giving back to community. Some of my favorite things about working for Cabot is that they are so just concerned with community. Again, owned by farmers, where a lot of times farmers are the ones that are out in their community doing the volunteering, whether, they're at their local 4-H group, they're the Girl Scout leader, they're the bus driver, whatever they're doing, they are volunteering. So a lot of what they give back to the community is to honor their volunteers. Programs like Reward Volunteers, it's just an opportunity for volunteers to log time that they're already spending volunteering, but then they can get prizes and rewards, but even more so they can get cash rewards for their organization. So again, giving back to that community is such a huge piece, and I've heard a few of you mention principles. The other one that, again, was also mentioned was cooperatives working cooperatively. My favorite example is actually just a few weekends ago I was down in D.C. at the National Co-op Festival, which was a new thing that NCBA did first weekend in October to kick off National Cooperative Month. And it was on the National Mall, beautiful setting, ton of people, great events. but we have a product that requires refrigeration. And there's no way to refrigerate it on the mall. So it was kind of a conundrum for us, and we actually ended up working with someone who could be considered one of our competitors, Organic Valley, who actually have, again, I'm going to refer to my cheat sheet, 80 Vermont farms are members of Organic Valley, which is actually located in Wisconsin, but they have 80 farms from Vermont. And we just said, hey, we're in a bind here, we need refrigeration. And they said, sure, you can come and put your cheese on our refrigerated truck. And, they had no reason to let us do that. They didn't charge us anything. They helped us beyond belief. And I just love that as being part of a cooperative, that's just the way that, things are set up. Like you said, working cooperatively, it just makes you proud to work there.
That's great.
Yeah. One thing really sort of on the financial sort of crisis, post-financial crisis question is, I think it's been an interesting double-edged sword for worker co-ops, because on the one hand, I personally kind of like the financial crisis was what made me aware of co-ops as a possibility, as a thing that existed. I learned about the credit union model and then just sort of tumbled head over heels into everything else. But for worker co-ops, on the one hand, Don, who's our executive director, has been doing this since 2001, is very clear that it's like the interest definitely spiked following the financial crisis, and really, he says, like after 2011 especially. But on the other hand, when we're talking about worker co-op conversions, it does make it a little bit trickier, because there's a lot of retrenchment in terms of lending, right? So a lot of institutions that used to do lots of, say, cash flow lending started wanting collateral. And when you're talking about trying to bring new co-ops into the world, and oftentimes with these worker co-ops, you have a group of fairly low wealth workforce. So they don't have a lot of property to put up as collateral. They don't have a lot of savings, and so these deals have to be done mostly with debt. You can do it with sort of non-voting preferred stock as well, and there's some more work going on that front now to sort of make the capital ecosystem a little more favorable. But that sort of tightening of lending standards and the really move away from cash flow lending, has been a pretty significant barrier for worker co-op conversions. So oftentimes you'll see a deal come together, and you're like, all right, well, the Cooperative Fund of New England is willing to bend over way this way to treat something as collateral, and then Vita comes in with a little bit of money, and the employees make some loans, and it's like putting together a jigsaw puzzle. And so there's definitely work going on now to try to sort of make that capital ecosystem more friendly. Even to the point of this past January, we started an investment club that specifically focuses on investing in co-ops. It's modeled after one in Minneapolis, and there's more talk of kind of how equity, these sorts of non-voting preferred equity might work. I know Greg Brodsky has been talking about a co-op big national co-op equity fund. So there's work going on, but is that financial crisis, the financial part of that, definitely created some barriers for worker co-op conversions that hadn't existed before.
So some of what you were saying there, Matt, kind of ties in somewhat with credit unions experiencing kind of a surge in consumer demand for small business lending since about that same period of time too. And credit unions there were some credit unions doing business lending prior to that time, but since then there's just been an increasing number, and I think it's simmered down lately, but an increasing number of individuals who look to their credit union or a credit union as a lending source for whatever their small entrepreneurial venture may be. And we heard at the time a lot of stories about wherever they had their line of credit before, more traditional bank and whatnot, retrenching, pulling your line of credit or lowering it and so on and so forth, and people looking for alternatives and turning to credit unions more and more. So, I think in a lot of ways, regardless of what kind of cooperative sector that you're in, for a lot of the reasons that some of us have mentioned, co-ops have just been seen as a more viable or more popular alternative for a growing number of consumers nationwide.
Yeah. Of course, in the case of housing, building multifamily housing, right, it's so expensive, that I think that it's really a very different market, from a consumer co-op or a producer co-op in terms of being able to measure demand.
Sure.
Right, and particularly, we're in Chittenden County, but our co-ops are in and around Burlington, so they're really kind of an urban phenomenon, and I think that if we were able to build 10 more co-ops, we could fill them, right? I think that there would be so much demand, but we're only able to measure that, excuse me, when we're actually in the process of opening a co-op. So we had a first wave of co-ops that we started in the 90s, and then just a few years ago we decided to open a new one that's 40 households. And so it was the first time that we had really done a marketing campaign for our housing co-ops, because before that we had so much more demand than supply, you know, that it felt wrong to even advertise them. It really felt like bait and switch, you know. You say, come learn about the co-ops, and then you can get on a wait list for 4 years. So, you know, we embarked on creating a new co-op, and we thought that there would be plenty of demand, but it was our first time to test it in a long time, and there was just so much. And again, so now it's, you know, it's filled, and now I do co-op orientations, and again, people are saying, well, when are you going to build a new one? You know, once again, they're looking at that wait list. So in our case, it's really, you know, I mean, housing is so tough in Vermont,
Yeah.
right? That the co-op model is sort of like this faraway dream in terms of, you know, kind of something that could go to scale to meet the interest that would be there for it.
So, would you say that like access to capital then is kind of like a challenge, or is it sort of that sort of the support network around creating these like?
You know, it is, well, so the access to capital is the big thing. I mean, the co-op that we built on Bright Street in the Old North End, excuse me, I don't have the construction costs right to hand, but it was, you know, well upwards of $10 million to build that property, right? We, at Champlain Housing Trust, to build our housing, we make use of a federal program called tax credit financing that brings in, I think we got a check for $5 million, you know, just brings in equity that goes into the project. That's what enables us to set those housing costs below market, right? So we rely on that federal funding mechanism. We rely on state funding. We rely on, you know, city. We rely on public investment at every level. It is, it's permanently, you know, it's permanently affordable. So it's a fabulous public investment, right? It's this one-time investment that creates affordable housing for, you know, decades and decades, right? So it's definitely well worth it, but it's a lot of money. It's a lot of money for, you know, given the scale of our state. So I think that is thing one. But in addition, you know, having started out with smaller cooperatives, we found that they do need governance support. They need technical support to flourish, and we provide that. If we were able to build more co-ops at the new scale, you know, of around 40 apartments or so, we would find, I think, that we would hit an economy of scale where, you know, that would become favorable, where the number of households relative to the need for support, you know, would go in a good direction, right? So smaller co-ops need more support than larger co-ops, basically. So I think that would be a great direction for us to try and move in. But where we are now is that kind of at that hump that so many organizations hit, where if we built a couple more co-ops, we would need more staffing, or we would need a different structure. So, interesting moment.
So we've been running a while now, and I'm respectful of the time of the people that are watching at this point. But I don't want to cut the conversation off either. So I suggest, you know, does anybody have like one really quick issue that we can touch on really, really fast to kind of wind things down a little bit?
Well, yeah,
Or I can do two.
I'll just amplify something you said earlier on that I think is true across the cooperative community. When you talk about governance, you know, I think the governance is is one of those critical things that define co-ops, and it is about, in our case, it's about the members elect their board of directors who serve and run the co-op. So it is those people who are using the service that are actually running the co-op, and of course I've worked in both worlds, and I will say that, you know, the focus is on the real important issues, and our board is definitely focused on those real important issues all the time. So I think that the governance model is something that I really want to plug. Yeah.
I want to underscore that plug. Working with, you know, people who are running their own housing, right? Who have so much control over something that is one of our fundamental human needs. You know, it's not their day job. They're not experts. There's a learning curve. Things can be bumpy, but I see how it can be transformative for the people who do it. right? And I feel like I'm so fortunate to be able to witness and be part of this world where people are deepening their democratic skills and kind of strengthening their democratic muscles and really understanding how to collaborate, and build community in this very real way in the midst of this, national political and international political moment that can just be so dispiriting, right? So I just feel like, wow, I hit the jackpot there.
So related to that, and also to the fact that it's Credit Union Day, that was one of the things that one of the early founders of the credit union movement, Roy Bergengren, spent the 1920s going around the country trying to get enabling laws passed, helping people start credit unions. And one of the big narratives that he always talked about was the sort of anti-narrative was, common people can't run a financial institution. It has to be, you have to be experienced bankers. And, by the time the 1930s rolled around and the model was really getting going, you could see that all these little financial institutions could be run by factory members or church parish, goers, or, and it was a place for people to not just come in when they already had the experience, but a place to build that governance, being almost like these little schools of democracy to sort of get people to the point where they have this leadership experience that can translate into other sectors of society. And I think that's one of those contributions that co-ops make that's really under-recognized, is it's about sort of building that civic capacity in people who maybe this is their first opportunity to have a leadership role in their housing co-op, but now they might feel comfortable running for elected office or, joining the board of a nonprofit they care about. But, sort of having those opportunities and making sure that that people feel invited and that they're accessible is something that I think co-ops really bring to the table and really need to sort of make sure that they embrace and kind of raise up as a piece of their impact.
Good points. Any other closing comments from anybody? Are we good? Okay. So I want to thank you all for joining me today and agreeing to participate in this little panel discussion with us. It's been great learning about all your different sectors and all the different issues and what similarities that we all have, yet some differences too. And we want to thank everyone that's been watching, certainly. Hopefully we've provided some insights about one or more of the areas that we all work in and our organizations are involved in that is of interest to you. I know it's been interesting to me. I hope it's been interesting to everyone else participating here and watching. If you aren't yet a member of a cooperative or would like to find out what other types of cooperatives you might be able to be a member of, we're not going to read URLs to you here verbally, but at the end of this video there'll be some links that you can go to find out more about these respective different co-op sectors and maybe find a cooperative nearby to you. So with that, anything else? We good?
Thank you.
All right. Thank you very much, and thank you all for watching.
Happy Credit Union Day.
Yeah.
This is where